There's been another rise in inflation, prompting some concerns the Reserve Bank could lift interest rates again. Consumer prices rose 6.8% in the 12 months to April, which is higher than expected. That's compared with a rise of 6.3% over the year to March. The jump in inflation is being fueled by significant price rises in fuel, housing, food and non-alcoholic beverages. Let's get more on the numbers now from our finance reporter, David Chow, with me in the studio. Hi, David. So the annual number has gone up. This isn't what we wanted, is it?
No, it isn't, Ros. So, yes, inflation going up to 6.8%. Certainly a higher than expected result, which has surprised a lot of economists. On the plus side, at least, inflation is well past its peak, which was reached in December. Back in December, inflation was 8.4%. So even with this blip, this rise, we're still much lower than that point. Now, you mentioned fuel prices were a major contributor. That's absolutely correct. And that's the reason is, I guess, the so-called base effect. So if we wind the clock back to April of last year, that's when the fuel excise cut was introduced by the Morrison government to relieve budgetary pressures. So that's why fuel was a lot cheaper then. But then that fuel excise cut has still since been unwound. So petrol prices in April 2023 are a lot higher than the year before. So that's why I had that distorting effect of petrol prices being much higher and lifting these inflation figures. Now, as for the housing cost, yes, for building new homes, the cost of labour and materials continues to be high, as well as in the categories of food, where there were big increases in bread, cereal and dairy costs, and non-alcoholic drinks, interestingly, as well as transport, recreation and culture, and rent. These also played a big part in lifting the inflation result to 6.8% in the year to April. I guess the more positive aspect is if you strip out the volatile items like food and petrol, then underlying inflation is down to 6.5%. But a lot of people will focus on that headline figure, and that will certainly cause some concern to the Reserve Bank that inflation is not going in the direction that it was after. Well,
they meet next week, don't they? Next Tuesday. What are they likely to do?
Yeah, this definitely complicates the picture for the Reserve Bank. Now, I had a quick look at what money markets are betting, and the thinking now is there's a 31% chance the Reserve Bank will lift rates by 25 basis points next week. So that probability has increased in the past hour, Ros. But there's still a 69% chance they'll remain on hold, which is the majority case. But even if they keep rates on hold next month, many economists think there will be at least one or two more rate hikes before the year ends. Now, I did speak to an economist, Stephen Koukoulas, a bit earlier today, and he says the path to achieving a soft landing, as the Reserve Bank puts it, is more difficult than the RBA has acknowledged.
For the RBA, it is a narrow path. The economy is weakening. We know retail sales in volume terms are going backwards, and that's a concern. And when we sort of crunch through what the Reserve Bank's thinking in terms of economic growth, the labour market, how high will unemployment get in this current cycle, there'd be areas of concern for them too. So, as you said, that balancing act between achieving their inflation target and hopefully avoiding recession is a very delicate one at this stage.
And complicating the picture, there was some really weak building approvals data yesterday and recently weak retail sales. So it is a tough balancing act for the Reserve Bank. So it is very difficult to predict what it will do next week.
David, thank you.
No worries.